Black Devs Asia to partner with us and allow Black Devs Asia to be part of Philippine Startup Week 2020. Before I introduce the panel, I would just like to briefly give a background on what the subject is about. Decentralized finance, or DeFi, broadly refers to blockchain-based networks, protocols, or applications that enable users to access diverse categories of financial services in a peer-to-peer paradigm, rather than through the facility of a traditional central intermediary. Also referred to as open finance, DeFi leverages blockchain and distributed ledger technology to reinvent finance by employing smart contracts to automate delivery. This transforms conventional financial products or services into natively digital artifacts that can be accessed without involving trusted institutions such as banks, insurers, and payment service providers. This panel discussion is intended for startup founders to understand what DeFi is, what should be considered in building DeFi projects, the prospects for these financial innovations, and the pitfalls and risks that developers should be wary of. This panel discussion will be joined by Chris Vercelles, who is the blockchain lead at Asian Development Bank, or ADB. With us also is Colin Goltra, who is the Director of Southeast Asia for Binance. Kaspar Ustendorp, founder of Uzenvort. Kaspar is also a co-founder and trustee in Black Devs Asia. Gustav Arento, business development representative of MakerDAO Foundation. You know how important Maker is in the DeFi ecosystem. And Tracy Lee, who is also a founder and trustee of Black Devs Asia. Good evening, everyone. Good evening, colleagues.
Good evening.
Hey, how are you, Rafa?
Good evening, Raf. What's up?
Very good. Yeah. Very excited. Very excited. The objective here is to really enable startup founders and developers to understand more about DeFi. So first of all, before we start discussing the subject, can I briefly ask each one of you, starting with Chris, to briefly tell us more about yourself and what you're doing in DeFi, in particular in relation to your specific organizations. Chris?
Sure. Thanks, Raf. So hey, everyone. So what I do at the Asian Development Bank is we essentially aim to future-proof the bank by looking out for new technologies, and specifically for blockchain, we look out to how crypto and blockchain can be applied in both enterprise and consumer-facing services to make sure that essentially what we call the Web 3.0, that's a term we can talk more about later, sort of doesn't leave development finance institutions behind. So I guess that's a high level of it. I can get into it more later.
For the information of our audience, Chris also is one of the co-founders and trustee of Black Devs Asia. Colin, can you tell us more about Binance and what Binance is doing in the maybe DeFi related, perhaps?
Certainly, yeah. Thanks for having me. So I work at Binance. I focus on the Southeast Asia region. So really focused on expanding the access to crypto and sort of other blockchain-based products in the Philippines and other Southeast Asian countries. I think Binance is certainly best known as a centralized exchange. I think very well known for being an order book and a place to get crypto liquidity for many of the most prominent tokens. But our leader, our CEO and founder, CZ, fairly well known in the crypto space. I think he has gone on the record several times as saying that DeFi is really a top priority for our organization. I think in the same way that Chris mentioned future-proofing the Asian Development Bank, I think crypto moves so quickly that even Binance itself is thinking about future-proofing itself. And so I think DeFi and ways that our company can participate in the DeFi ecosystem are really core and top of mind for our organization right now. And so we're actively looking for ways to expand those initiatives and participate in kind of the rapidly expanding DeFi universe here.
Yeah, Colin, we're going to talk about later about some of the recent statements by CZ in
Definitely,
relation to
yeah. Let's do it.
that's going to be
Yeah,
for lately. Yeah, but quickly, can you tell us more about Crypto PH, by the way? What's Crypto
Yeah,
PH?
absolutely. Yeah. I guess for the benefit of the audience, everyone on stage here is pretty good friends, so we all kind of know each other well. Crypto PH is a separate thing, which is I think the ecosystem now has several different has a track record. Companies have risen and fallen, and I think many of the key players in the ecosystem know each other well, and we are actively as a community thinking of ways that we can expand cryptocurrencies, blockchain technologies, DeFi, crypto art, play to earn gaming. There's a bunch of these new crypto categories that we think can really benefit the Philippines, and so we separately also have a community where a lot of us kind of chat about new developments, kind of support each other in our various projects, and so that's hashtag CryptoPH. I think we spam it all over Twitter, and so it's easy to pick up our trail if you just go to hashtag CryptoPH. Yeah, that's another community effort that we're all actively involved in here. Actually, everyone on the stage.
Yeah, thanks, Colin. Kaspar, what's going on at Oostdenvoort? Am I pronouncing it correctly?
Yeah, that's correct. It's Dutch. So I'm Kaspar, software architect, entrepreneur. I'm in the Philippines for 11 years now, originally from the Netherlands. And my company, Oostdenvoort, we're based in Alabang. And we are developing blockchain and cloud solutions for customers all over the world. So right now, I am actually partially running the company, but ideally I'm coding and designing applications. So my main customer right now is Ramp DeFi. It's a project out of Singapore. So at this moment, I'm actively coding smart contracts. So,
all right.
I'm a techie.
Yeah. Gustav, can you tell us more about yourself and what you do at MakerDAO?
Yeah, sure. So my name is Gustav, and I'm Danish, and I manage the European and African business development for Maker. Last year, I also spent a lot of time in Asia. Went to the Philippines a couple of times. Met a couple of the people I see here as well. Most of you actually. And at Maker, we really push the first stablecoin, decentralized stablecoin. We're also by far the largest decentralized stablecoin and the third largest in general in market cap. DAI has really manifested itself as like the backbone of decentralized finance, and over the summer here, where DeFi really was booming, we also saw a really big spike in the supply of DAI and the usage of DAI. So now we have almost $1 billion or $1 billion DAI issued. DAI is pegged to the US dollar, and is currently the stablecoin on chain that attracts the most activity within decentralized financial protocols. A big part of like the ethos of the Maker Foundation is that we really want to push equal access and equal opportunity to financial services for people all over the world. And this, resonates very, very well with emerging markets, for example. So that's why we have a very strong focus on that part of the world. And yeah, we've had quite a bit of development in the Philippines recently, launched some interesting partnerships, had our first official PHP to DAI on-ramp launch as well. So happy to be here.
Yeah, Gustav, we know you're very busy, but we really thank you very much for making yourself available tonight for this panel talk. Tracy, can you tell us more about yourself as a female blockchain developer and also your role at Block Devs Asia?
Yeah, sure. Yes, I am a software engineer. I've been a software engineer for almost 18 years now. And I am also a co-founder of Block Devs Asia. Right now, I am actively involved in organizing events that would educate people about DeFi.
Nice. Thank you so much. Okay, guys, just to level set everybody, can we discuss what is DeFi, and also can we talk about some of the common buzzwords, or maybe not just common buzzwords, but important terms that we need to bear in mind, like perhaps the term governance token, yield farming. Can we talk about this concept? But first, what is DeFi from your understanding? Who wants to start?
Uh,
Maybe
Yeah,
I'll
sure.
start. Sorry,
no,
go
you can
ahead.
start, Tracy.
Right, ladies first.
Well, DeFi basically is an ecosystem of financial products, and it needs a stable coin to facilitate the system. And these products and services are written in smart contracts, in most cases deployed in Ethereum. So yeah, one of the important terms that we should discuss is what is flash loans, what are money legos, what is CDP collateralized debt position, and all those stuff. So yeah.
Yeah, I think like what we really see with DeFi now, it's like the first time since financial services started being part of society, where you could actually start having like it's kind of like a new paradigm where instead of having like localized, centralized financial issuers, then you have a global system, right? And the global system does not discriminate. It's completely permissionless. It's trustless. So instead of you going to like local entities in your local region, all of a sudden you have access to this like global system where everyone gets an equal access and equal opportunity to get into these protocols. If you look at like traditional finance in general, it's quite biased, right? Like depending on where you're from, who you are, things as like race and religion, you get vastly different opportunities within financial services. So I think DeFi really, presents this opportunity where everyone on a global scale can get an equal and fair access. We like kind of like a part of like the value proposition for us is that we don't really see a reason why someone in the Philippines or in Denmark or Argentina should get different services like if they bring the same assets, right? So I think this is really like a big opportunity to kind of like include a big part of the population of the world that historically has been kind of like left out to really, join a global and fair system.
Yeah,
Colin,
and I think
you want to add to that, yeah.
And just to add to what both Tracy and Gustav said, I think Gustav touched a little bit about what traditional finance looks like, right? So I always think about DeFi, broad strokes, maybe to non-crypto audiences. It's sometimes best to teach about DeFi by counterexample, right? What does the legacy financial market look like, right? So there's banks, there's money transmitters, the traditional financial system. It's very hard to transact peer-to-peer, to transact without intermediaries, without people in the middle. And when you have intermediaries or middlemen in this way, even if many of them are very well intentioned, it's very hard to have those those intermediaries control a lot of power in society, right? And so I think previously, everyone on this panel at some point is gonna veer into the realm of sounding like a blockchain utopian to some extent. But I think prior to the internet and then the advent of kind of the blockchain as a data structure, it was very difficult to create internet scale or global scale financial services to kind of everyone, right? And so we can go into some architecture things about why the blockchain makes this possible, but ultimately there's this internet scale system that allows people to transact sort of directly with one another. And so because of certain ways of how it's architected, there's now an ecosystem that's thriving around instead of transacting through an intermediary or some centralized institution, which is susceptible to be corrupted or to treat users unfairly in some way. I think financial services are now being built around protocols instead of around companies or organizations or centralized institutions in general. And so I think DeFi is really the spirit of that age at the moment, and it's kind of a movement built around sort of some of these financial services built on top of protocols.
Kaspar, your thoughts on DeFi, and could we also slowly explain some of the concepts that a beginner would typically hear in this space, like maybe governance token, DAOs, flash loans, whatever concept you think is important to know?
Okay, so I'll try to not go at everything at once, but DeFi is decentralized finance, so that means it's not run by one organization or yeah, something that's localized in some way. Anyone can basically run a DeFi business. That's a nice thing. It's free, as in anyone can do it if you know technology. DeFi is decentralized, but it's also, and you use that word also, Raf, is open finance.
Okay.
And that is actually the nice other property of this new development. And me as a developer, what I use a lot is the fact that since everything is published on a blockchain, everything is open, everything is out in the open, including all the code, all the programming code that makes up these financial products and systems. And for innovation and for transparency, that is something unprecedented, really. It is as if now you can see how a bank works. What do the employees do? What are their procedures? And anyone can see it, except now it is computer code. And that drives innovation. Myself, I am very happily going to Etherscan and other sites where you can inspect the contracts of services. So you can imagine that before, innovation is slow, and right now it's actually very fast. There's a lot happening in the DeFi space where products are launched and they are successful and they're immediately copied. Someone adds something nifty to it and it becomes more successful. Or someone published something, they made a mistake, and they're immediately getting in trouble because people found out how to exploit that mistake. So there's a lot more transparency, there's very fast innovation, and anyone can participate. So that excites me a lot about DeFi.
Chris, as blockchain lead for ADB, what can you say about DeFi?
Well, I guess just DeFi in general. I like to think of it as what I call, or what a lot of people call, low or no barrier finance. So, like, this is touching on what Tracy, Gustav, Caspar, and Colin already mentioned. But I guess if you look at, again, like Colin was touching on a traditional banking system, you have these minimum balances, you have cash in, cash out fees, you have transaction fees. I think all that contributes to high barrier financial services. If we're talking about DeFi or no barrier as an idealistic goal, then that would be essentially the opposite. So no minimum balances, no cash in, cash out fees, no transaction, well, some transaction fees, but much, much less than what you would get charged in a traditional banking sense. So what does this make it really perfect for? It's for low infrastructure areas. Like if you're trying to onboard or provide financial services, or what people call financial inclusion, right? People talk about it all the time. For rural areas. So those people really cannot afford, and they don't have the let's say the spare income to pay for cash in, cash out fees or minimum balances, etc. So I think that's what like no barrier finance is. So this will enable us to actually tap the rest of the economy and bring them in at scalable but low infrastructure costs. So yeah.
Right. At this point, I'm gonna ask about some concepts, important concepts in DeFi, and can somebody please explain them? To our audience. First, what is governance token? What is that? How do we understand that? Perhaps Gustav or whoever wants to discuss this.
I can take this one. We have one ourselves. So basically, whenever you have these protocols, so for example, the MakerDAO protocol, you basically have like a lot of different parameters inside the protocol which are changeable, right? So for example, in our system, we allow people to lock up collateral, and based on the value of collateral they're supplying, they can then basically take out a line of credit and die. Whenever people lock up collateral, there's certain risk parameters around the collateral getting added. So things is like, what are the interest rate? What is the maximum amount of DAI that can be printed against this? And what is the collateral ratio? So when do we need to liquidate the position in case it gets too risky for the system, right? Another thing is also which collateral types should be added, and what is the framework around adding these collateral types. All of these things here are decisions that needs to be taken, right? So in the Maker protocol, we have what's called the Maker token. It's a top 35 crypto asset, and the Maker token basically allows people to go in and participate in the governance process of the system and taking decisions based on the weight of Maker tokens they have. So this is, for example, like a way where it's kind of like as you know, like you vote with the stake you have in the system. So it's based on the monetary value you have. And then you're basically, you know, enabled to take decisions which will influence the entire part of the system. The governance process is a little bit longer than just voting, but in general, governance tokens kind of like is you know a term which describes the tokens that enables decision making on the blockchain when tapping into, you know, individual decision makers or centralized decision makers. You tap into a community of decision makers who in uniform, you know, together, you know, through economic incentives are aligned to take the best decisions for the protocol.
All right. Yeah, Gustav, another thing that Maker has is a DAO. What is DAO? Anybody who wants to talk about DAO, Gustav, sure, or anybody else from our, the panel who wants to talk about DAO? This is not really a new concept, right?
No,
what about DAO in 2014 and 2015? Yeah. But how important is that in the DeFi ecosystem, or when you're building a truly DeFi project?
I mean, I don't. So I think like currently there's not that many DAOs, like true DAOs operating actually. I think like I'll let someone else explain what a DAO is, but I think like right now a lot of the DeFi projects. But this is something we also did at the Maker Foundation, was basically that, you know, you cannot really be decentralized from day one. So it's like a gradual process. We're one of the most mature projects in the space. We launched in 2017, and the foundation was formed back in 2015. So we actually predate Ethereum as a technology. It was one of the first Ethereum projects. We like have a little bit of a head start on that front. But I think like for many of the DeFi projects, they need to be decentralized, right? But it's still like kind of like a work in progress. And the DeFi space is still relatively new. And I think this summer was the first time we really saw, you know, not mainstream attention, but like mainstream crypto attention towards the DeFi space, right? So there's still like a long way to go, but like we are like an operating DAO, and I think maybe Colin, you can explain what a DAO is. I know you're pretty well versed on this topic.
Sure.
Let's just remind our audience what a DAO is. DAO or DAO stands for Decentralized Autonomous Organization. Yeah, Colin.
Yeah, exactly. So you know, conceptually, I guess. You know, I think I'm going to relate everything as a, you know, as a counterexample to centralized finance, right? But, you know, in centralized finance, you think about infrastructure, right? And the infrastructure is owned by, you know, a single corporation, a single company, you know, a group of companies of some sort. But there's clear ownership, there's clear decision making, there's clear rules and access, right? And so control of that thing is very well understood. Right, it's controlled and centrally owned by a company, and then that company is controlled by the executives. They have shareholders. Like there's a very clear sort of centralized alignment of things. You know, in decentralized finance, no one really owns that infrastructure, right? So if you are, you know, if you're using a piece of DeFi, you know, if you're using Uniswap or using some other sort of core you know, core financial infrastructure using crypto, how is it governed? Who owns it? Who controls it? Right. So DAOs are a model of organization in which like I guess many different actors can kind of control inputs in decision making without the thing being centrally owned or centrally controlled. Right. And so you know, in very simple terms, it's a smart contract with very clear parameters about inputs and outputs and who controls those parameters. And so it ties very closely to what Gustav was saying about governance tokens, and it's kind of who controls the thing if no one owns it or controls it, right? It's there kind of is this there kind of is that fundamental question. And so DAOs, are a solution that come up in this kind of decentralized protocol world because, you need some entity, even a loose or decentralized one, to control many of these pieces of infrastructure. And so it's just kind of codified and kind of anyone can participate in that sense. I can imagine there are probably audience members for whom they are now more confused, but I did my best.
Yeah. I would. Yeah. Go ahead.
Oh, sorry. I was just going to say, I guess a radical oversimplification of it is imagine shareholders in a company, but now on the blockchain with crypto tokens rather than actual voting shares. A radical oversimplification, but yeah.
Mm-hmm. Some of our audience might have heard of the term yield farming because that has been kind of a buzzword for the past few months or so. We can't have a DeFi panel talk without at least explaining what is yield farming. Chris, you want to take this?
Yeah, sure. I'll do my best. So yield farming is essentially I guess if I have to start by explaining a more core concept.
Yeah,
so there's a basic so the way these DeFi works, it's built on, let's say, these crypto tokens, right? ERC20 tokens for the most part, but there's a lot of different kinds. So let's focus on fungible ERC20 tokens that might be represented as currencies or stable coins, or let's say for the point of this example, let's say a Philippine peso. So let's say we have a stablecoin Philippine peso that is a crypto token, or people call it stablecoin. You'll have that. Let's say you deposit it in this lending protocol, and for depositing that as collateral that the protocol then lends out to borrowers, you get paid in interest. Now, you don't just leave it there and then get paid in interest. Oftentimes, you'll get something called a wrap token, meaning it's just like a token that literally wraps the collateral you deposited and functions as your claim to withdraw that collateral. Now, this collateral, you can then do the same thing again and deposit it in another protocol. Anyone correct me if I'm wrong, if I'm getting it wrong, but you can deposit in another protocol and then again get paid interest for it, or whatever incentive scheme that protocol might have. So I guess that concept is like yield farming, meaning you take one collateral, you stake it for interest rate or yield, and then you take the wrap token, then you stake it again, and then you get double yield or something like that. So maybe that was like a very simple explanation without taking into account all the intricacies, but I guess that was my easiest explanation of yield farming. Yeah.
Gustav, anything you want to say about yield farming? And then maybe Colin can also.
I think over the summer we really saw like this whole term yield farming really boom, right? And it started in June, where a protocol called Compound, they started by giving out a newly minted token they had called the Compound token. Compound is a lending platform, a lending and borrowing platform. So basically, they put out so that the users, if they started lending and borrowing on the platform, they would start earning rewards in Compound. So this token bound up to the protocol. So all of a sudden, they gave an economic incentive to their users, and this kind of exploded this whole thing over the summer, where a lot of different protocols to attract users' liquidity and capital started by basically distributing what they previously had as their own token. So historically we saw a way of getting token distribution being either doing an ICO or some other kind of for example these launchpad offerings that Binance also offers, where you directly go out and sell it to the market. We also saw a lot of projects, for example the Maker Foundation, we sold to VCs, big VCs, right? But then all of a sudden this new term started, where all of a sudden the protocols, they started giving the value of the protocol directly to their users. And that meant that, for example, Compound, they went from around $100 million of assets in the protocol to $600 million in just 2 days. We also saw Uniswap booming. There was this little thing as well with another protocol called SushiSwap that did it. But Uniswap, basically, if you look at before they started doing yield farming to now, they went from $600 million of assets to over $2 billion. So all of a sudden, protocols, even newly launched protocols that had zero users and zero traction, they could attract massive amounts of users and a lot of capital just by offering economic incentives for the users of the protocol. So yield farming is really this concept where you distribute some kind of yield to your users, often seen in a native project token, in reward for them supplying liquidity or volume to your project. So I think that's kind of like where I see yield farming. Of course, this brought a lot of scams with it as well, but I think in general, the concept is super interesting, right? Because rather than selling off your tokens to investors, you can actually give it directly to the users of your protocol and attract a really strong community around it as well.
Yeah, Colin, tell us more about yield farming. You want to say something?
Yeah. I guess the last comment I'd make is I think in the introduction when we were talking about DeFi, a couple themes that got brought up were financial inclusion and kind of financial access in general. And I think generally when people think about financial inclusion, they think of entry-level financial services like payments, international money remittances, these sorts of things, because historically you're including people that didn't have access to these things previously. Yield farming actually is a financial inclusion product. It is including the rest of us in what was once the province of very sophisticated investment banks and their legal teams. So prior to the crypto and blockchain space, this existed as a structured products desk, right? Where you were tranching up a set of debt tranches, and instead of using a smart contract, you were using a legal contract to split it up, put different derivatives and sort of things on top of, I guess tag different pieces of its return or its yield or its rates, and you could kind of tranche those up and trade those as separate products. And previously it was really hard to do this, so you would do it at very large investment banking scale. It was very hard to do this technically, so instead of using a smart contract on something like Ethereum, you'd use a legal contract using an army of lawyers. And it was impossibly inaccessible because no one, an individual would never think to do that by themselves, right? So this was really the province of large investment banks and hedge funds doing it on sort of traditional financial assets, right? But now that and maybe I'm preempting another term we'll have at some point, but something like money Legos, or now that we have an ecosystem of of very distinct kind of financial products and financial pieces that are universally understood and largely interoperable with one another, it really does create the opportunity to bring financial inclusion to what was once kind of the hedge fund space, right? And so one way to think of yield farming is kind of mass market, structured derivatives, because in reality that's what it is.
Yeah. I just remember the term that I want to use to describe the composable or modular feature of DeFi protocols is I like to use the term money Minecraft because that seems to be more newer compared to Lego. But money Lego is nice too.
You're a hip zoomer, Rafa.
Yeah. Money Minecraft.
Hey, Rafa, I just want to remind you that Lego is Danish, right? So please keep Lego here.
Yeah. The official stance of the Maker Foundation. The official stance of the Maker Foundation is money Lego. Yeah.
At this point, let's be more specific. Can we talk about particular use cases of DeFi that you find interesting? Maybe Kaspar, you can start with this. Anything specific? I'm sure somebody wants to talk about that.
Specific. Yeah, I don't really have anything specific right now. But what just excites me is that anything under the sun becomes tradable anywhere in the world by anyone. So it's more the promise of the future. I mean, what we're doing today is super interesting as well. But the future
I'm
seems so much
particularly
nicer with
interested about the intersection of NFTs or non-fungible tokens and DeFi. Maybe somebody can discuss that as a use case.
So I can add to that. So NFTs are non-fungible tokens. For the audience members that don't know what that is, it's basically a representation of it's one unit that cannot be divided, non-fungible. So fungible tokens, for instance, Ethereum is a fungible token, which you can have 1 or 10 or 100. And non-fungible, there's only one and it's unique in principle. So NFTs, non-fungible tokens, are stored on the blockchain, which is basically a big database that tracks the ownership of something. So an NFT, as a programmer, you can program an NFT to be owned by someone who happens to be able to have the private key. This is cryptography, but you have to be able to control it, and it is not based on if your name is on a piece of paper or if your name is in the database of a company. In the blockchain, it all boils down to, do you have a cryptographic private key that allows you to manipulate that piece of the database that keeps track of what is yours? I hope that's clear. But basically, NFTs it started out really like a fun game. I believe CryptoKitties is the most well-known early one, where you could own a cat with specific features, and those were sold, and they were sold so well that the Ethereum blockchain pretty much melted for a few days because people loved it. And many people still own these CryptoKitties. And the nice thing is that as long as the Ethereum blockchain is alive, as long as it is running, these kitties will always exist. And the ownership will never change unless someone wants it to. So NFTs, it started with CryptoKitties. But there are companies now that are starting to put these private keys, not just that you write them down, you have them in your password manager or in your wallet. There are actually microchips embedded in cards or other devices that hold a private key in such a way that no one can extract them. So one very interesting thing that I saw quite a while ago is that you can have your private key in a piece of plastic, and that goes together with an item that is unique. For instance, a painting or sneakers or anything. So this allows us finally to tag, actually to prove the ownership of something digitally, while you have something physical to back it up. So maybe this goes a little bit far, but theoretically, I have a pair of sneakers that is authenticated to be very special, and I have the piece of plastic to prove that, and I can then sell it to someone on the other end of the world.
Yeah.
So I hope this is clear. So these are non-fungible tokens combined with a physical control.
Crazy. Any specific use case or maybe DeFi protocol that you fancy? That you
I think, yes, what interests me right now is because there are a lot of exploits and attacks and hacks. I think it's important also to have something like Nexus Mutual to cover or to have an insurance on your yes, on your DeFi. So it's interesting for me because it kind of balances the ecosystem. Yes.
Any other interesting use cases?
So,
Chris, stuff, yeah.
Whenever we talk NFTs and DeFi, for example, the community around the MakerDAO protocol, they have actually for quite a while looking to onboard what we call real world assets. So like, legacy style assets, but, wrapped in a system or like put in a wrapper so it can actually be put into a decentralized financial protocol. So for example, we have like applications on our forums to be onboarded as collateral. There's, for example, a company called Shuttle One operating out of Singapore that does trade finance and short-term debt instruments such as invoices and receivables, right? So, and we also have Centrifuge in Europe who's doing similar things. And in this case, you would then, for example, take an invoice, you would put it on the blockchain in form of an NFT. The NFT would, very clearly express things such as like expiration dates, so like maturity of the invoice, as well as, which amount, currency, receiver, and so on. And you can actually take that and put it into a smart contract and create a derivative of the value in that smart contract that you can then use in DeFi. So, for example, Centrifuge now they already have, I think the total book, it's around $5 million. They have onboarded in the last 6 months of companies that are getting finance through, you know, the creation of a non-fungible token that represents some kind of real-world asset, and then they have a system, they have like a technical setup to ensure like the security around it and a few other things. But the basic principle is basically that you take traditional assets, wrap them in form of an NFT, and then you can use it as collateral in DeFi protocols.
Mm-hmm.
So this is where you directly link kind of like the ability of the DeFi protocols. You directly link it to real world companies and not just speculators and like people who is interested in the crypto space or working in the crypto space. We can actually provide financial services to SMEs, for example.
Yes. Gustav, am I correct that you're referring to, in relation to centrifuge, are you referring to deep tier financing?
Sorry, can you repeat that?
Is this? I think this is what is called this deep tier financing, right? The ability of small and medium enterprises or businesses to be able to avail of financing services relying on the credit of their suppliers above the supply chain.
Exactly. That's one of the use cases they work in, which is like the receivables and invoice markets. It's like a market that is like it's very expensive to get these services from the banks.
Yeah.
So if you can automate the process on the blockchain and use the blockchain as the settlement layer, there's at least like a potential. And the theory is that the efficiency gain is so big that you can provide them a lot cheaper. And you can also toy around with some economic incentives around it. So, for example, you're doing receivables or invoices, and then you put in like an equity tranche in the bottom, so that if something defaults, the people who lose the money the first will be the asset originator. So the companies who's facilitating these invoice financing, right? And then the top tranche or the senior tranche in the protocol will then be financed by DeFi protocols. So there's like some different ways of doing it, but the cool thing about blockchain and Ethereum and smart contracts is that it's very flexible, right? So you can completely build the setup in the sense that you think it potentially would make the most sense, and you don't quite have to be bound by the compliance team of the bank or something like that, right? You can really innovate on these fronts here.
Colin, how about you? Favorite use case for DeFi?
Oh, I think there's a bunch. So I think right now we're really in the, I think as Casper mentioned, we're really in the early phases, right? So there's a lot of stuff that's discussed sort of longer term, like prediction markets and kind of various derivatives on every sort of obscure human interaction. But right now, I think there's a few that I would really point to, and I think the DeFi space is growing sufficiently large that to some extent it's all blockchain, and the space kind of is feeding off of each other and eating it and eating each other. So one on the NFT side that I really enjoy is actually like crypto art. So I think digital art is having its own kind of little renaissance here. To the extent you mentioned NFTs earlier, basically the simple description is that in the internet prior to the blockchain, there was no way to guarantee that a file would not be copied, right? There was no way to prove that you had the original version of a file. Pretty much everything digital could be copy and pasted, right? And I think, because of the blockchain and its distributed ledger and what it does for kind of the concept of provenance and ownership, digital artists are now, there's an entire scene of digital artists who are creating, work on their computer and, launching that work as a token. And you can basically own the original certificate of authenticity for that work. And there's now a secondary market of people buying crypto art and then flipping it to, because the artist becomes more valuable as their profile increases. And so, I think outside of my day job, I've been very active in crypto art lately. I think it's just a really fun and exciting application. I mean, I still think in terms of the concept of like compounding financial primitives, I think we're just getting started in terms of what DeFi products kind of interact with each other. Candidly, I think I'm still a big fan of MakerDAO. I think they've been around kind of the longest in the space, but they're also among the more proven projects, and they have something in production that people actively use. It's a real world use case, and I think it's just every piece of this space can kind of interoperate with pretty much every other piece of this space, and so
the concept of usability, right?
Longer term, I think what I'm really interested in is prediction markets and kind of derivatives and these sorts of interactions. But I think those are still in the very early days, and so those haven't been proven to quite the same level that we hope to see someday.
Colin, just very quickly in relation to crypto art, we should mention that some of these artists are Filipino artists, right? So
absolutely. I think one of the cool things is, as we've mentioned several times now, sort of access and sort of, permissionless access to this, right? And so, I don't care that much where the artist is originally from, right? It doesn't have to be some small circle of, New York elites, or something to have, art that sells hot for a high number and does well. It could really be someone from, from Cebu or from Utah or from Australia. It doesn't really matter where in the world they are, so long as they're good at their craft. They're good about presenting it to an audience. And so we really are living in sort of a flattened internet age in that sense. And so it's become quite popular here in the Philippines. There's several fairly well-known crypto artists. I think Luis Buenaventura actually is a man of many event talents and probably a friend to many here. And he's quite successful just selling crypto art. Yeah, which is fantastic.
Fantastic. Chris, some use cases for DeFi. Could you share with us?
Yeah, sure. Well, Colin mentioned some foundational ones, so I guess I can go with some like cool, not necessarily proven ones. One thing that I like, well, maybe it is already being proven, but Engine, which is one project, they allow you to essentially. So if you've ever played Minecraft, like that you create something, it pretty much just stays in the Minecraft server, right? But because of this concept of composability and digital scarcity, so essentially what you're able to do is take your Minecraft creation, and if your Minecraft server is linked to the Engine platform, you can take your creation and then sell it online. So I guess that expands into more ways. So for example, like if you play CSGO or Call of Duty Warzone, you spend all this time grinding to make these loadouts, right? And these are really unique to your character in a few ways. You can sell these sorts of things when, assuming they're integrated with NFT platforms like Engine. Another cool use case I think is interesting is the ability to invest in like real estate abroad. Like usually this is like you're stuck in your region into what's accessible around you and what real estate you can buy or invest in. But now you can get fractional ownership of, let's say, real estate properties in like the other side of the world and get rental income from it. And this rental income can hit you every month, every second, every hour. And that is one really important, one interesting thing as well. So those are two use cases I think are pretty interesting, not necessarily foundational ones. There's a lot more. I don't really know where to start, but those are some interesting ones.
Yeah, can I just ask the panelists, how big actually is the DeFi market? And what are the opportunities for Filipinos and Philippine-based founders?
Yeah, so I think, over the summer, with the DeFi boom, we're standing now at a situation where we have around $11.4 billion of assets, the major DeFi protocols. This is something that, it went up, almost 10x over the last 6 to 12 months. So I think if you go and you compare it to, the user acquisition, the growth of, spaces that in the past has been similar, such as, for example, the peer-to-peer lending markets started coming out in Europe around like 11, 12, and 13. You also see, kind of like these like neobanks that has been growing a lot. In Europe, you have places like Revolut, for example, N26, Monzo. There's like a bunch of different ones, right? But if you look at like the periodical growth for like DeFi and these projects, like these very successful fintech companies in their like prime growth periods. The DeFi growth has been much higher, right? The innovation has been much faster. For example, to launch a neobank, the estimated cost is around $100 million to get it up and running, with the banking partners, licensing, as well as like the basic functionality. If you take and you compare that to how much it would cost you to spin up a wallet, for example, like Argent, that has integrated much more complex services because of DeFi integrations, the cost is a fraction, right? So I think right now we are seeing kind of like, I think Chris touched upon it a little bit earlier as well, that all of a sudden you can actually build scalable solution with very cheap infrastructure. And that's because like you can take the work of others that people spend thousands of hours building, and you can integrate it directly into your protocol, and you can gain all the benefits of using that service. So I think, we're really just seeing kind of like how money Legos has also been mentioned a couple of times, and the concept of money Legos is that you can take several protocols and you can like build them on top of each other, then all of a sudden you have a new product. And as the innovation grows, as all of these big DeFi projects, they continue to develop their protocols, as we see new ones starting to spin up, this composability will just continue to being this like exponential growth of innovative solutions that you can add very easily into your user aggregation products, right? So DeFi is really, you have these different layers, and you kind of like have the protocol layers, and then the top layer is called the user acquisition layer. And this layer is only going to be more and more advanced because of all the underlying infrastructure. So I think, if you take a look at like, the potential for DeFi, I still believe that we are just very early on. I think it's difficult to make like a very precise prediction of where we will be in, even a year or 5 years. But with the potential for like exponential innovation and growth, I think that we are just starting to be at like the tip of the iceberg.
All right.
If I could add to that really quickly, if you don't mind, Rad. I think what Gustav said is really important, especially for a developing country like the Philippines, where there's a lot of like high percentage of rural areas. Because like what Gustav said, once composability starts taking like a network effect, you can just build on top of previous protocols. That will allow you to offer things like financial services that you can just plug into. So for example, if you want to make a Gcash clone, and Gustav was talking about this as well, so you want to make a Gcash clone, you don't have to spend millions and millions and millions and raise so much money just to do the same functionality. You can just tap into MakerDAO and build a UI, and you're done. That's it. You now can offer the service to one user, the same cost that would take you to offer the service to 1 million users. So that concept of scalability and composability is really powerful. So,
can we now talk about some of the risks or pitfalls when you're building a DeFi projects? What should be considered, or what should founders and developers should be wary of when they're building DeFi projects? Wants to address this? Maybe Colin?
Sure, I'll chat a little bit about it. So,
About this.
I think one of the things that happens is it's a very manic space. So people get very excited about the different projects. And even though it's all open source, I think sometimes a lot of times people outsource their trust in a project to others, right? And so I think there's money involved. There's there's kind of celebrity characters that pop up as celebrity developers and so forth on places like Twitter. They're generating money and sort of creating a return for people. And so what happens is they outsource their sort of decision making or their critical thinking skills, whether that be, auditing the open source software, whether that be thinking through whether or not it's a good investment opportunity, and a lot of times people are risking their code or their money, on projects that maybe haven't been vetted yet, right? And so there's I think that really gets talked about a lot in this space is FOMO, right? Fear of missing out. And so And the opposite of FOMO is maybe YOLO, right? Which is you only live once. And so, I think a lot of times people, get caught up in a moment and they want to move quickly, right? And so I want to put the difference of half of a day in making some of these investments when they're really this flash in a pan moment, the difference of half of a day that you could have been using to audit the code or to be reading research reports as on an investment opportunity. That sometimes is the difference between making making very little return and a huge return, because you're discovering a new token or a new project right before the rest of the crowd does, right? And so it can be an incredibly high risk endeavor because people are placing their trust and a lot of, there have been a lot of instances just in this last DeFi boom of people really outsourcing their trust and their good judgment to other people, and a lot of times that has been misplaced, right? There's several projects which really followed a boom and bust cycle, and I think the people that were very prudent, they didn't lose money in the instances where those projects imploded, but also they lost out on a lot of money where had they just put their money in without doing the diligence, and gotten lucky, there's kind of a lot of compounding risk in the space because people aren't doing their diligence quite as much as I think people expect them to.
Yeah. Other risks that founders and developers should consider. Maybe Gaspar? Yeah, go ahead.
Yeah. So I agree with Colin. I have a number. Basically, what I thought of is what I see happening a lot is we have a lot of we talked about Legos, right? The composability. What it brings with it, there's now a really huge network effect. So a lot of people are flocking together to new services. They're connecting new services together. And it's also emergent properties. So suddenly these systems, as they change, as they get combined, new stuff starts to happen that nobody designed. And that is something to be wary of. On the other hand, it's also exciting because sometimes that new stuff is actually really good. The other thing that I noticed personally is that the tools and the systems right now are not mature. So yes, it's mostly free and it's super powerful, but it's also not mature. So it's very easy to make mistakes, both as a user as a developer, or even when you design a product.
Yeah.
So the other pitfall is, and it's also a double-edged sword, is that smart contracts are visible to anyone. So the good thing is you can do your due diligence a lot better. On the other hand, the moment that you publish your code and you think you have an advantage or you're ahead of the crowd, 2 days later, someone else publishes something better. And there goes your months of work.
Yeah.
And then the final one is really that average users and developers right now are not protected from bad actors. So there's no vetting. There's no, like Colin said, you have to do your due diligence. But it's so much and it's so complex that it's actually almost impossible. So it's also a double-edged sword.
Yeah. So Gustav, this question is specifically addressed to Gustav. Gustav, can you could you share with us some practical experiences that have been learned by Maker Foundation for the past 3 years in building a DeFi project, such as MakerDAO, of course?
Yeah, I mean, I think probably like one thing that really comes to mind was the March 12th crash. On March 12th, we really saw the first like financial, crash around, the COVID outbreak.
This is also referred to as Black Tuesday, if I'm correct, or Black Thursday.
Black Thursday. Yeah.
Thursday.
Fortunately, we didn't taint Taco Tuesday yet. But yeah, so back then the markets really crashed, right? And the thing is that so the thing about having a DeFi project is that whenever the settlement happens on chain, and I mean it's final, right? This is also why security is of such a high importance. So basically, when you have that in mind, whenever you design a decentralized project or protocol, you need to think about all these different edge cases that can happen, right? Because you actually need whenever you build a DeFi project, you need to be able to account for every single edge case, almost no matter how unlikely it is, unless it's like completely impossible or something that you cannot avoid, like what if someone bought all the tokens and shut down your project? I mean, that's just unavoidable if that could happen, right? But all this and all the market-driven edge cases, you need to be actually able to have some kind of countermeasure towards that. So whenever you build a DeFi project, it's a lot of like game theory around how would people act in these different situations, these weird situations. So of course, this is something that has been spent a lot of time around in Maker. And basically, when the entire markets crashed, Ethereum crashed around 60% in a day. And we, because of the nature of our system, we have these collateralized lending positions, right? So basically, people were all of a sudden getting liquidated all over the place. This combined with like a very, very congested blockchain actually made it so there was no liquidity to bid on the auctions, and the DAI peg kind of like broke also quite a bit. So we were suddenly in a situation where the kind of like the protocol failed due to external forces in a few of the parameters. Like the overall protocol was fine, but there was like a part of it which was the liquidations where the protocol suffered a loss. And then since then, the community kind of like took this in and really digested what happened and made a lot of improvements to the protocol so it couldn't happen again. But I think it's also like one of these things where sometimes, no matter how much you theorize about it, like something can go wrong. Fortunately, at Maker, there's this kind of like insurance of the protocol where the Maker token is the final stopper. So in case that you have under collateralized positions, then the Maker tokens will have to repay for those positions. So the system won't go underwater or won't get under collateralized. But it was definitely like a very, very stressful day and period, and a lot of learnings were taken away. And this is something I think we're probably one of the most conservative foundations in the ecosystem, and the governance community around the Maker protocol is very conservative. But it's something that we see with a lot of different DeFi projects in general, is that they often hit some kind of edge case that potentially hasn't thought out, and then something needs to happen with that, right? So I think like whenever you build these protocols, you really get to kind of like understand that when you have a settlement that's final, things get very complicated, especially when you put it into a decentralized environment, right?
Yeah. So I'm sure that all the panelists would agree that most of these DeFi projects are being built on Ethereum. Chris, given that you have experience building blockchain systems for both enterprises and the crypto space, would you say Ethereum should be the preferred smart contract platform by default? Or are there alternatives, especially for DeFi?
I think it depends on what you're trying to do, and anyone feel free to chime in. But I think if you're trying to build something that needs to take advantage of composability to the fullest effect, then you need to build it right now on Ethereum, for the reason that all the other dApps are there, and essentially all the liquidity in DeFi is there at the moment. Now they're building bridges from Ethereum, but maybe that will change in the future. But Ethereum right now is where you can take full advantage of the composability. So public permissionless chains like Ethereum, yeah. If you're talking about an enterprise environment, that's a bit of a completely different story. So there are other like platforms building like parallel ecosystems, like for example R3 Consortium. They're nowhere near like any kind of DeFi for enterprise, right? But they've released an XDC coin. Is it XDC? I think it's XDC. Yeah, and it's supposed to be the basis for the future version of enterprise DeFi, right? But it's like way behind, because they have different priorities. It's a regulated environment. They usually use permission systems. There are permissioned layers on top Ethereum, like baseline protocol, and that looks really encouraging. But again, a lot of it's in the early stages, and DeFi composability on Ethereum public chains are just a bit ahead in some respects. So it depends what you need to do. So if you're asking me, the first thing I think about when building something is, how do I build it on Ethereum? To take advantage of existing tools and the app's composability. But then if there's really a limiting factor, especially in a regulated environment, then that needs privacy, etc., then I'll start scaling it back a bit. So
yeah, Colin, I think, was it last week? CZ, the CEO of Binance, which is the largest exchange, centralized exchange, made a very interesting statement. He said that the days of centralized exchanges like Binance are numbered. No? Could you explain to I'm paraphrasing, but essentially that's what he said. The days of centralized exchanges like Binance are numbered. Could you explain to us what you meant by that?
Yeah, definitely. So I definitely don't want to put words in my new boss's mouth, but to some extent, CZ had a very quick rise to power. I think within 180 days of launching Binance, they were before I got here, they were the top sort of centralized exchange. And so you don't get to the top spot without realizing, that some other very brilliant person could get there as well, right? And so I think CZ is, very diligently thinking about all the ways that the current business is going to be disrupted, right? And so, to some extent, he talks about prior technology, companies. Right? Kodak is one that comes up a lot in, town halls and those sorts of things, right? I mean, he's actively thinking of the ways that the current business model, which Binance is best known for, is going to be disrupted. And so, in addition to just, continuing to try to make our core business successful, which we are trying, we're actively looking for the thing that's going to kill our core business so that we can be involved in that as well. Because I think, making money in a short, time frame is nice, but having a company that survives a really long time is even better. And so I think CZ and the other leadership, the other leaders at Binance are really actively thinking about sort of frontier spaces. And actually, I think if you asked, our company, what does Binance think of itself as? We're not just our exchange or just our smart chain or just our DEX. I think Binance itself is kind of an ecosystem of crypto products. A word that gets thrown around a lot is that we're an infrastructure provider for the crypto ecosystem, right? And so, maybe 2017 to 2020 or 2021 was the era of centralized liquidity, but in the 2020s that is likely to change. And so we're actively thinking about how to participate in that next thing as well. And so, I think he knows that nothing lasts forever. And so he, we're actively thinking about ways to future-proof the company.
Mm-hmm. Gaspar, Tracy, both of you are very active in the local blockchain community. What have you observed so far in the Philippine ecosystem in terms of DeFi projects? Are you seeing DeFi projects here in the Philippines being launched by Filipinos and Philippine-based projects?
Definitely. Right now, it's still very young, but I believe that it will gain traction in the next couple of years because this type of technology is very much appealing to developing countries like the Philippines. So we can provide a lot of services on top of
Gaspar, any
DeFi.
interesting action in the Philippines?
Well, what I can say, so from BlockDevs Asia, I have dealt with a lot of developers, and that is what I really like about the Philippines. The Philippines has a lot of very talented developers, young, driven. They speak English really well, and they look out into the world. And so far, that is why I am here as an entrepreneur. That is really what is a great promise for the Philippines. And I hope also that many new entrepreneurs will choose to go into DeFi. But as it goes, right now there are not many real blockchain developers in the Philippines. It's a growing field. It's pretty difficult to master. So that is really something that we're working on. with BlockDevs Asia to get more people interested and skilled
Yeah.
at developing.
Anybody heard of HaloDAO? I think that's a really amazing project.
It is. It is. It looks very, very like
Is that
promising.
still,
I wonder who.
or we can,
It's been mentioned in passing.
Yeah, I know. I mean, who started that? That's like such a genius plan. Like,
yeah, a very good looking founder. Yeah, well, yeah. Can we briefly talk about that? What's HaloDAO?
Yeah, Chris, that was your in, man. he set you
oh,
up.
sorry. What was that? Oh yeah. Okay. No, sorry. I think I dropped out for a bit. So HoloDAO is a project I'm affiliated with as well. So essentially, what it is, it's a synthetic Philippine token, stablecoin. So essentially, the same way that you mint DAI from ETH. And the way that Gustav explained, you can take this DAI and mint it in, and essentially lock it up in a smart contract and generate Philippine pegged pesos. Now, it's very important to say this because this is a public setting and people are recording, but this is not Philippine pesos. It's just has a similar value to Philippine pesos.
Yeah,
But why is it important? It's because stable coins pegged to regional currencies are the basis for permissionless commerce, essentially. So when we got DAI, what happened, and Gustav explained that a lot, we got all these DeFi products that were able to have semi-stable, somewhat stable to a certain extent, like trades between pairs, and they were able to build a bunch of stuff on top of that. Now imagine what you could have with the Philippine peso equivalent, not the actual Philippine peso. So yeah, I guess that's a basic high value of it, high level run through of it.
Yeah. So yeah, I really want us to explore more these topics, NFTs, Binance, DeFi related initiatives, HaloDAO, Maker. What's next for Maker? But we're really running out of time. Can I just ask each of my co-panelists to give their final takeaways on DeFi? Maybe starting with Tracy.
Sure.
Yeah.
Well, as a developer, I am very much excited about this industry, and takeaway would be try it out yourself and get involved with it. That's all.
Kaspar.
Yeah, DeFi has a very low barrier to entry when it comes to money or anything. So anyone can basically set up a bank or a financial system from their bedroom. And even in the Philippines, if you have a laptop and you know how to use it and you know how to program, anything is available to you. And I think that is the power.
All right. Yeah. Chris.
Composability is only as useful as the community you plug into to apply that composability. So join CryptoPH. So
Awesome.
Yeah, nice.
And speaking of CryptoPH, Colin.
Yeah, so I think the big point about decentralized finance is two things. So one, it's really early days in the space, right? I think as Binance, we are actively anticipating the day that the space is so much larger than what Binance is right now that Binance itself gets disrupted, right? So if you really dive into the blockchain, cryptocurrencies, #CryptoPH, and the broader DeFi space right now, I think there's still quite a lot of opportunity ahead of you in the coming decade or decades plural. The second thing is, historically, if you wanted to be at the epicenter of finance, you had to be in London, New York, Silicon Valley. You had to be in, maybe ancient Venice or something, Amsterdam actually. And now, I think there is no center of finance anymore, right? You can be in Quezon City, you can be in Siargao, you can be really anywhere in the world. You can be on the moon. You can be, there's going to be a little bit of lag from Mars, but Mars eventually. There's not going to be a financial hub in the same way, right? And so if you are in the Philippines, but you're still the best in the world, there's no one stopping you anymore. Like you have open access to be the best yield farmer in the world, to start a crypto fund, to start a token set, which is basically its own hedge fund. Like, the barriers, some of the barriers are still there, but they're rapidly eroding. And so, get involved. I think this is like I think this is where the talent in the Philippines really gets its opportunity. Yeah, this is our moment.
And finally, our friend from Baker Foundation, Gustav, can you give us some takeaways?
Yeah, I think basically like what is so exciting about, like, to follow up a little bit about what Colin just mentioned there. You know, like all of a sudden you have this ecosystem, this like new paradigm that you have the opportunity to join, and basically right now, I mean, there's still like a lot of opportunities. You know, almost every single company I talk with are looking for developers. And like a lot of the big DeFi organizations actually have open positions. A lot of them are remote as well. So there's like a really, really big opportunity to join this movement. And I think another thing which is something that really consumes people once they're in is there's this like very, very strong community within it, right? So I mean, that's why like most people in this call have met in person before and hung out, even though we are from like vastly different backgrounds and parts of the world. And this is like a trend that you see all over the space, right? So everyone is kind of like building towards this like same goal ish. You know, some people are maybe a little bit more anarchistic than others, but in general, people build towards this same goal, right? Of including and lifting the entire space. And I think that's just like a really, really great thing to be part of.
Fantastic.
Yeah, I think I've met Gustav twice in person and like 100 times on Zoom.
Yeah.
So
I've hung out with Gustav in a couple different cities now throughout Asia. So yeah, everyone on this call knows each other well, and it's, you know, we've kind of when working indirectly, and all our work kind of benefits one another. So it's good.
Yep. Colleagues, thank you very much. We don't have time left. We just have to continue this at some other time, in some other platform. Philippine Startup Week, thank you again for this opportunity to discuss DeFi. I hope the audience learned a lot. With that, good evening, everybody. Yeah, till next time. Till Philippine Startup Week 2021. Bye.
Thanks, everybody.
Bye. Thanks.
Bye-bye.
Bye.
Thanks, everyone.
Hashtag lechon. Hashtag crypto.
Yeah. Hashtag CryptoPH. Yeah.
Yeah.
In law and first principles.